Hello, and welcome to Legacy Curious. I'm your host, David Gravelle, and today on Legacy Curious, we'll be inviting Scott MacDonald back, the CEO and founder of MacDonald Financial Solutions, to talk about helping business owners prepare for retirement and sell their businesses. Hello, Scott, and welcome back to Legacy Curious. You know, the last time we had you on, we talked about helping business owners eliminate their debt in a fraction of the time without spending any more than they're currently spending on their debt payments. And we did this by using the power of the whole life policy to protect the key person, accrue cash value in the policy, and borrow for themselves money that will pay off their debt in lump sum payments. But today, I want to talk to you about how business owners who have little to no debt can prepare their business for sale and save for retirement. Now, I believe this type of strategy, you're using the term Fortis. Is that right?
Well, so yeah, Fortis is my company, our agency's name it's kind of it's a marketing tool, it's a brand. And basically what it encompasses, David, is what we call our legacy pyramid. And what we find is there are really three aspects to wealth, especially when it comes to a business owner. The first one is we look at income protection. I mean, everyone who is an entrepreneur, everyone who owns their own business, as you do and as I do, your greatest financial asset is your ability to make an income. And if that is gone, then all of a sudden you have lost that ability to do that. So, for example, and we see this all of the time. In fact, just a couple of studies and some different statistics that have been out there. By the time someone is 65 years old in the US, which, by the way, there are many business owners that are out there that are at that level, right? We're not talking about two or three, there are many. By the time you're 65, you have a 70% chance of being diagnosed with a critical or terminal illness.
Wow.
And so when you think about that, the first piece to our Fortis legacy pyramid is protecting your income. And so we simply do that with a very inexpensive life insurance term policy that allows us, David, this isn't your father, your grandfather's life insurance. The old days, you used to have to die to get something to work for you, right? And you weren't around to see that. Well, now we're able to use the power of life insurance to be able to use the death benefit while you're alive. So people can now replace. So you've got that first piece there, right? Where you can use that to replace that. The second component to it is, how do we bank? And it's very similar what we talked about last time on your show, where you have people using whole life policies and the power of compound interest to be able to get out of debt. Well, what happens if there's not debt? Well, guess what? That means even more money for you. That means even more of that compound interest that you're not spending at a 10%, 20% spread, giving it to your lenders. Now it is back inside and it's continuing to build and build. And then, of course, the third way, using the same principles, is strictly retirement. We all know as business owners, especially small business owners, the cost to provide retirement and the limitations and the restrictions and and the expense of all of that. And so we look at with now businesses and we look at how do we utilize what we have available with life insurance to accomplish all three. And once we put this up, David, to any business owner and let them compare what it looks like versus what they're doing, it's always been very, very well received.
Okay. And so, you know, if they needed to get caught up with their retirement, you know, they can make large lump sum payments, and then as the business continues to earn, you know, they make monthly payments. Is that how it works? Or
It certainly can. I mean, you have the thing that I love about these is there's not a one size fits all, a kind of deal. There are a lot of companies that are cash rich during some parts of the year, and then seasonally they become cash poor. There are some that a monthly, I could take it out of cash flow, is a better way to invest than giving a lump sum up front, because I just the coffers aren't that big, right? So either way it goes, we're able to put something and create something for the entrepreneur, for the business owner, based on their financial situation. Yeah.
Okay, and so once that's in place, that becomes part of the sale. How does that? What's the exit strategy
Well,
once they're ready to retire, and if they're not passing on the business, let's say to another family member, but they found someone to buy it.
yeah. So I'll tell you how I've seen it used before. There's actually a couple of different strategies, and both work just fine. So the first is when the business takes out this type of banking policy, a whole life policy, or when they take out really anything that builds cash, that asset belongs to that business, and it depends on how the business is structured. LLC, corporation, or most of us, frankly, are just sole member LLCs or sole proprietors, right? And
Buy it.
so
Sure.
when that happens, it is under as a separate asset. It's listed on the balance sheet as a separate asset, because you have cash growing instead of in a bank, money growing in a bank where it's making the bank money. You have now money, and that is listed as an asset, most times non-liquid, even though there's liquidity there and you can get to it right away. So then what happens is, say, for example, I want to sell my business. I go through some kind of valuation process, and let's say it's an IT computer company that I'm bringing in $1 million a year. Well, based on the type of business it is, they're going to look at, well, so on and so forth. It could be worth 4 to 10 times the amount. They go through their process and they say, okay, based on your book of business, this is what we're going to offer. And that used to be the end of it. We had assets or
Right.
cash in the bank, and that becomes part of it. But now all of a sudden, we have a whole other area of another bucket, David, where we have assets. And that's within our cash value with our life insurance policy that we've used to become not only our own bank, but that we've been able to use a margin or spread on our investments to be able to make more money, even while we're paying down our debts. Or if we don't, we've just put the money there and now we have that asset. So what happens is, not only is there a valuation of that business, let's just say for the sake of this, $3 million, right, that they would pay for this IT company. But I've got $1 million sitting over here in this asset that was registered under the company's name. Now I can do one of two things. It can be included in the sale. And for me, just doing the things that I normally do anyway with everyday business, now I have an increase of whatever that dollar amount of my valuation. Or we separate it out. They pay for the business. Not only do I get that check for $3 million when I sell it to you, I get to keep my life insurance policy that has that asset there as well. So it works both ways. It is a wonderful concept that we've seen just transform a lot of business owners' lives. And the biggest thing that, frankly, we see now is just, boy, I wasn't aware of it. Why wasn't I aware of this before? And I know for sure that's why we're talking right now, is because your desire is to get this message out.
That's exactly it, Scott. Is that I'm trying to help them understand what happens once they sell the business and take this policy with them,
Hmm.
and how they access the money, how it grows over time. So maybe you could talk a bit more about that. Let's talk about that scenario. The business is sold, and now they have still maintain this policy, and tell us what that's like year over year and for the rest of their life.
Sure. Yeah. So obviously the first thing is, not all life insurance policies are the same. It all depends on who you've used and how it was set up. But assuming that this was done by a professional and that is set up, roughly right for the scenario, this is what would normally happen. So the business is sold. I still have this life insurance policy. Well, there are a couple things, David, that I know are going to happen. Number one, I know at some point I'm going to die. So life insurance is more and more important to me and my family every day that I'm alive, because I realize that it is, to some degree, it's going to be exercised at some point, right? I'm a 24 hours closer, 24 hours closer. But the other thing to keep in mind is that if it's set up correctly, you have cash value that many people use appropriately for retirement. Because once you're inside, you have cash inside a life insurance policy, the smart way to use that money is tax-free.
Right.
And one of the things that people, when we talk to them in businesses, they look at retirement and they're thinking 401ks, they're thinking all of these things that show up on the front page of your 1040. They show up in the tax line, but you can use life insurance to be able to pull out tax-free payments for your retirement. And so whether you're looking to get cash out for retirement, whether you're looking to use part of the money of the 3 million that you had and put it into something that perpetually keeps going, but literally, if it's set up correctly, you could be earning anywhere from 6 to 15% every single year, tax-free for the rest of your life. And when that life ends, your beneficiaries are able to take that death benefit tax-free and change their situation as well. So it really, really works fantastic when it's set up the right way.
Well, thanks for that, Scott. We're going to leave it there for now. And I just want to, again, encourage our audience to get in touch with us here, talk about your situation, how this would work for you. Again, the benefit of the whole life policy is for your whole life, and you're able to withdraw tax-free and still have that growing asset over time. So it just sounds like it's just got a lot of potential to help a lot of different people in a lot of different ways. So thanks for watching, and we'll see you next time, Scott.
All right, man.
Thanks for watching, and we hope you learned some of the advantages of using insurance strategies to prepare your business for sales and retirement. Next As always, I'm your host, David Gravelle. This has been Legacy Pyramid. Everyone has a story.